The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, if I haven't said it before, green is my favorite color, and we got some green in corn and the soy products and soybeans on the day Thursday. A nice little short covering type of rally after quite a few sessions to the downside in grains, particularly the row crops. Let's talk about Thursday's market action and put some perspective on this nice little rally we got on the session. Joining us now, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to talk with you again this week. And as I mentioned, it's always nice to talk on a day where there's some green on the screen, Brian.
Yeah, there is definitely some green on the screen for the corn and soybean markets. Now, wheat, on the other hand, has continued its slide, but boy, after 7 days in a row down for both corn and beans, really nice to see some reprieve. Probably the most impressive thing about today, though, Jesse, was the close. The close for corn and beans was right near the high of the day. And that's encouraging. That tells me maybe we've got somebody saying, you know what, I want to buy this stuff, and I think it's going to go higher. Or we've got somebody saying, you know, I better get out of my short positions. So don't want to read too hard into the tea leaves. It's 1 day out of the last 8, but from a bigger picture perspective, it's a matter of the market finding some support and maybe finding some fundamental concerns. Or finally the market recognizing to many farmers that there's maybe some fundamental concerns with just these very saturated areas. To get in and replant corn doesn't look too likely. Things are a mess. You got continuous rain as of late. What farmers do have is in most of the central Midwest now, they got 4 consecutive 6 to 10 day outlooks with below normal precipitation forecasted. So maybe there's a sliver to get things done. But there'll be some acres of prevent. We know that already in talking to farmers.
In terms of the soy complex, it sounded like these potential tax law changes in Brazil was kind of the initial spark Thursday morning. That's about the biggest thing I saw news-wise on the day that kind of impacted the bean trade. Would you agree with that, Brian?
I would, right. So there's a proposed, I guess I'm going to call it legislation that would, in essence, put a hefty tax on exports to raise revenue for the country, right? So farmers have basically shut off selling. They want to see what this looks like. I don't know intuitively if that makes a lot of sense, that if they think a tax is coming, that they're going to hold off for long. But it seemed like that this was something that kind of gave the market a boost, and then you back that up with prices holding support levels. So if I want to choose a contract in beans, I can. Let's just choose November beans, for example, back down to the levels here yesterday, back down to where it was in early May, and in the same ballpark as mid-April. And that's beans went on sale compared to where they recently were. So some of this wet weather, though, is again, I'm going to kind of circle back to that. I don't want to play that card too hard, but you have to acknowledge it on June 6th.
Oh, very, very true. Looking at some of those soy closes, I know old crop July right at the 12 handle on Thursday. Novi beans 1167 at the close. I wonder, you kind of alluded to this. 1 day doesn't make a trend, but anything on these soy charts that points to hopefully, maybe, potentially some follow through on Friday, or could this spark some farmer selling here on a short rally?
I wonder how many beans farmers have left to really sell into the marketplace. So because we go back, we had much higher bean prices relative to corn this winter, and so farmers need to sell some, but a lot of farmers are down to what let's call it their gambling stocks on soybeans. So I think the idea is that if you start to show a little strength, you're going to need more before it really pries it out of farmers' hands. There isn't any one technical signal that I would look at today and say, boy, we're right at the verge of doing something. What we did was make a nice turnaround on the July beans. There's resistance on the chart at $12. You got several moving averages there. Lo and behold, where we closed today, right at $12, right? So you've got the 50-day, the 40-day, the 100-day, and the 10-day moving average all pancaked together. Things are really tight right there. So that's a lot of average. If the market can push through that, all of a sudden it's going to look like it might test 1225 and then back up to the 1250, which is the high end of the recent range. So that's the technical picture, but we'll need some catalyst to really get it moving. And I don't know if we've just got enough. I just don't know if at this time of year there's enough weather you can factor in other than the wet, which we'll get beyond that here in another week. Then the focus goes on warmer conditions. It goes on to potential drier conditions, but what we term summer weather. But you already have some farmers kind of talking about, boy, we're wet. These are in some other areas that haven't gotten rain the last 10, 15 days, and all of a sudden they're saying, well, we're getting kind of dry. So you're going to have a lot of that in the weeks and months ahead, in particular if the weather pattern moves, Jesse, from the El Nino to the La Nina.
Corn market, looking there, D's corn just shy of the 470 handle on Thursday. July corn getting a couple ticks above 450. For corn, anything here? If corn largely has felt like a follower for a while, and it looked like it followed the soy complex higher on Thursday, but anything big standing out to you in the corn market, charts, etc. here after a nice little rally on Thursday?
I'm going to say no, not on the charts. It's a nice day. December corn, you could argue, posted a really big outside day. It did slip into a little lower value than the previous day. So technically you've got, some people call it an outside day, others call it a reversal. I would call it a bullish key reversal because you took out the previous day and the nearby trend was down. So a really nice, potential signal to the marketplace that maybe corn doesn't really want to go any lower right now, and it shouldn't. It's not in the bin. It's not a crop that's made. It's got the full growing season in front of it. Yes, the ratings started out well, but when don't ratings generally start out well? When you have enough moisture, the crop's green, the nitrogen kicks in. What you're going to see, though, in the next few weeks is that the better growth to the crop that occurs in June than, let's say, in a cooler May, is going to hide a lot of problems, or the sins, if you will, of some holes in the field, some unevenness, some poor stand counts. That'll all come back later. In particular, it'll come back in a pretty big way if it turns warmer, drier in the late June, July, August window. But without being too wordy, you broke some pretty good support this week and last, and now we got to get back up to that old support, which is now resistance, and break through that. I think 475 is going to cap it for right now in December until the market really concerns itself about a weather issue.
Brian, the wheat trade too, you kind of alluded to that, just kind of mixed on the day. It feels like on one hand, some advancing harvest pressure and good ratings in the U.S. versus the much talked about weather issues in Russia and Ukraine, kind of just the both sides of the coin there, and kind of left us just stranded on Thursday's trade, Brian.
It did, but it looks weak all of a sudden. And when Chicago contracts today finished very close to the low of the day, and that's been the more recent pattern here. So the overall uptrend, you can argue, is still in check, but I've got a couple what we call different channel lines. One was a pretty steep channel line that was violated about 5 sessions ago. And then the secondary channel line, we're at pretty good support level here, maybe another 5 to 10 cents lower. You've got a head and shoulders formation starting to form. So all of these kind of technical things, technical jargon. What the bottom line is though, that it does suggest or portend that the wheat market might have seen, and probably has seen, its high. Harvest will kick in. Australia's crop will be larger. But there's so many uncertain things in the world out there. The Black Sea region, maybe they got some beneficial rain. Russia, Ukraine, the war still marches on. So I'm not necessarily suggesting the high is in, but it sure is acting like the high is in. But the last 3 sessions, I just don't like those closes. And it looked to me like the trade has been today has been busy selling the wheat, buying beans, selling the wheat, buying corn.
Felt like too, crude oil has come down quite a ways, but crude up a little over 1% on Thursday. It felt like that was maybe a supportive feature overall as well for the grain trade, Brian.
That is that market too. So there's been this kind of which market's leading the way lower? Was it the 7 consecutive sessions in corn, or was it beans, or did wheat tip over because it was overvalued, or is it something else? And the something else, you can't kind of escape this crude oil. That had a really tough go of it. You look on a chart and see, well, what do you mean by that? Well, I'll just take a peek at, you can find your poison, but on the crude oil chart in August, as an example, on May 29th, traded $80.11. Yesterday, the day before, under 73. That's big percentage changes in value. That's 7 divided by 80, just rounding. And it's 8.75% in 1, 2, 3, 4, 5 days. Those are some volatile markets. That's a lot of percentage change in a short period of time.
Brian Doherty with Total Farm Marketing is our guest analyst here on the show today. Let's go over to the livestock trade. Cattle futures, feeders, triple-digit losses there again. This cattle market maybe taking a little pause here, waiting on cash activity this week, possibly. Could be stuff for the outside markets too. I know we got another bird flu outbreak in dairy cattle in Iowa. It just felt like there wasn't any really supportive items for the cattle trade for futures anyway on Thursday, Brian.
I think you're right. We couldn't find any, right?
Yeah.
So we've had these good cutout values. We've had what appears to be decent demand, but the market it's hard to find a discrepancy like we've seen here, where you've got a high cash price, and yet the board can't get up to it. The board is just lagging and it's struggling. And the board I think it just believes that there's 2 things happening here. One is demand will wane now that we're past Memorial Day, at least for a bit. And that 2, there may be a point here where the speculative interest is taking a defensive posture in cattle on worries, and we've talked about this before, just the economic climate out there, that can the consumer chafe beef prices higher? And when pork went on sale here recently, and when the board price really took a tumble, you can't help but think that hogs will be a focus for a lot of creative retailing in the supermarket and big box stores. It's a good product at a cheaper level that right now is very competitive, or more competitive to the beef market than probably most of us want to believe.
Oh, and you think about that economic aspect too. Another little interesting tidbit I saw Thursday: Europe cutting interest rates for the first time in 5 years. Wonder if that could have any sort of impact on the U.S. Federal Reserve for interest rates, and maybe that long talked about awaited interest rate cut, if that actually happens. But just that news coming out from Europe on Thursday was an interesting one in my eyes, Brian.
Well, Canada yesterday, right? 0.25%. Europe. So you've got some activity that would suggest that there is growing confidence in this soft landing, and that things aren't going to crash and fall apart. Yet they got to manage this pretty well, that they can keep, let's call it, keep everything greased and keep it moving. You need money to do that. But if that's the case, we might find here in the U.S. that is a catalyst to a weaker dollar, and that ultimately that provides additional support for U.S. products.
Hog trade has been pummeled, and we found a little bit of green on the screen there on Thursday. So I'll say that was positive. Any notes for you in the hog market right now, Brian?
Just one of those markets that you're just amazed that when it starts to move in one direction, how it can keep going so fast, so hard. one, exports have been a little bit on the disappointing side. Two, demand hasn't cycled back in from the consumer. Thirdly, these pigs that are coming to market are really relatively big size, and the average weights are on the heavy side too. But yeah, real disappointing market. I happen to be looking currently at the July contract, traded twice up in the 110 area, posting a double top. And that was the last one was in late April. And then the market has just been straight down from all the way through the last week of April, June, May, and then now into the first week of June. So the technicals don't look much weaker or much better either for hogs, but I look for demand to start to cycle in the hog complex.
Brian, good stuff as always. Let's wrap it up here today. Anything final for you that you want to mention or reiterate to folks today?
We saw the grain market, the soybean market, wheat kind of tip over pretty fast and hard on Memorial Day night. There's always a concern if you put orders in, they get swept up, the market keeps going. But always keep in mind what percentages you're sold and how much of a good problem that might be. I'll be inclined to believe that large rallies in the grains in particular are going to be difficult to come by. So have your wish orders above the market. If they get filled, let them get filled. Don't cancel your orders. You don't want to be like a lot of farmers were this past year. They were just caught with very little corn sold. They just had blind confidence, and it just didn't happen, and prices moved lower into the winter months. So sell rallies. Don't buy into necessarily planting delays as the catalyst to a bull market. It may be a starting point, but it may not be what sustains a bull market.
Brian, as always, I know if folks want to reach out to you and the team there at Total Farm Marketing to get some advice on their marketing plan, they can contact you multiple ways. How can they reach you, Brian?
I'd ask first for a phone call, Jesse, 800-334-9779. Again, that's 800 and then 334-9779. Or shoot me an email, Brian with a Y, at totalfarmmarketing.com, or check out our website.
TotalFarmMarketing.com is that website. With that, Brian Doherty, always good to chat with you, sir. Have a great weekend. We'll talk to you next week.
Well, thank you. Appreciate that.
Brian Doherty with Total Farm Marketing joining us here today on Market Talk. We're out of time. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.